Not to swear on this thing
There
in
you
case
go.
someone uses
So
it.
I've been looking for a question like this. Let's see if this is the question I've been looking for. Because it's a whole paragraph. And so when I get a whole paragraph like this, I like to sometimes read the answer set first just so I know where it ends up. We'll recognize the CPA already has written authorization. Okay, so that's helpful. I now know when I read this paragraph, it's something about authorization and a CPA. Should contract the appropriate supervisor. I always like those choices, so that seems like a reasonable thing to do, depending on what the question is.
Yeah.
Must explain to the CPA that without written authorization, the seller can't be accepted. I like that one too. Must act in the best interest, and if that means following the CPA, and that no, that's definitely I haven't even read this thing yet, and that's not correct. Okay, then the next thing I like to do in these paragraphs is read the last sentence first. The agent handling the account. Now, you wouldn't think that's informative, but it does, because now we know that we're being asked about an agent of a broker dealer and not an investment advisor rep. So that's important in the cast of characters who we're talking about. Okay, so now we can read the question. Mira is a client of Panache Preferred Investments, a broker dealer registered in 17 states. Who cares? And with the SEC, who cares? Who cares for now when I'm reading? I'm just picking up information. I don't think that's going to be relevant. Mary gave a standing order. Now we got to order in writing that her annual tax information to be sent directly to her CPA. Again, so far I got a bunch of stuff doesn't look like it has anything to do with the question. Several years after this arrangement came into effect, a change in tax law makes it urgent that a certain security in Mary's account be sold. Mary is vacationing on a remote island that has no telephone or internet access. Because of the urgency, the CPA contacted the agent handling the account and explained this and gave an order. Oh, I like this one. They're always good at making up reasons where you think it would be okay and your heart's in the right spot, but you can't do it. So your answer is
C.
good answer, right? No matter what the situation is, we say, sorry, I can't do that.
Yeah. One
I
element
think,
of the formula used to compute the Sharpe ratio
right.
is one
Now,
element.
I don't like this particular question, and here's why. The more important thing about the Sharpe ratio is the higher the Sharpe ratio, the better, because you're getting more unit of reward per unit of risk taking. That's the test question. But one element used to compute the Sharpe ratio is
D, standard deviation.
good job. Good job. Oh, come on, Dean. Can't hit the button. An agent for a broker dealer member of FINRA may exercise his judgment regarding with which of the following without written authorization. This is very testable.
An agent of the broker-dealer member of FINRA may exercise his judgment regarding which of the following without written authorization from the customer. Um, Time and price.
Oh, I love it. 2 and 4. Way to get right is the three A's. The three A's. All the following are characteristics of a rights offering, except.
Which one is not? All right. It is issued to current stockholders. The subscription price is below the current market price. The subscription price period is up for 2 years. The rights are marketable. C, because those are rights are quick,
Oh,
warrants are
love
long.
it. I love it. I love it. You're right on. You got to be able to address rights and warrants, and you did so. Perfect. Oh, the following numbers represent the returns from an investment fund over the past 7 years. Using the range measure would indicate the 7 years return from the fund had a range of.
So the lowest is two. All these numbers are confusing. The lowest
I'm with you.
two,
I'm with you. But
highest 13. So we've got 11, right?
yeah, excellent.
Yeah.
Excellent. Excellent. In reviewing the prospectuses and registration statements, the SEC.
Reviewing prospective statements and registration of the SEC does not approve or disapproves the issue. And that's yes. Guarantees the frequency of disclosures made. No. Passes the merits. No. Certifies the accuracy. No. It's got to be A.
Right on. By the way, did you get a copy of the email I sent to Brian?
No, I did not.
I sent it to MT. Is an I missing from your Gmail address?
Yes, it's MTC King.
Okay, so if he should be sending that to you again, check in your junk folder, and if not, because he's probably emailing the password you need to access it to that.
Okay, I'll take a look at that.
Or just send me. Do me a favor, Mitch. Just send me an email Dean at guruexamprep.com. Say, hey, thanks for the comp, and I'll forward it to Brian so he has it.
All right, 1 second. Let me get all the way over here. Gmail. I'm gonna do it right now so I don't forget.
Yeah, I'm with you. I wish I was more on top of
What
this.
is Dean? What?
Dean at guruexamprep.com. And then I'll just tag it off to Brian.
Dean
I
at
sent the copy to you. Yeah.
guruexamprep.com.
Dean at guruexamprep.com. And
And what do you want me to say for a reminder?
just say, hey, Dean and Brian, thanks for the comp, and then I'll just forward it to him. He already
Okay,
knows, and he's got to do it. But if you didn't get a copy, I'm afraid he's sending that to the what it auto-populated when I put your MT whatever it was. So I don't know,
got
maybe
it.
your spam
All
folder.
right.
All right, boom, boom, boom. In most cases, the front cover or prospectus for a registered stock offering must contain a statement to the effect that the SEC or state, if an interstate offering, has not approved or disapproved the security. This statement is known as
In most cases, the front cover of a prospectus for a registered stock offering must contain a statement to the effect that the SEC or state, if an interstate offering had not approved or disapproved security, the statement is, it's got to be the disclaimer.
yeah. This is a funky kind of a language, right?
I thought it was, I'm like, what?
No,
That's a
I'm with you.
no-brainer.
I think that's a kind of a. Should we know that's disclaimer? Yes. Do I think this? If you would have missed this, I would have not, as your tutor, been worried at all about it here. All the following are considered to be equity securities, except this is very much a test question.
All the following are considered to be equity securities except equity securities except. So it's asking,
Yeah, you can flip it. I like that. You want to approach a question like this, like rephrase it. What are they asking? They're asking, and this is the test point, that one of these is debt security has credit risk.
yeah, it's equity linked notes is my
Very much a
gut
test question.
reaction.
Always go with your gut reaction. That's correct.
Okay.
So remember, there's custodians. Well, warrants if you exercise provide equity financing. You own the UIT. There's a custodian. ETFs have custodian. So I'm with you. I don't like the phraseology, but what they're getting at is that's a debt instrument with credit risk.
And yeah.
Right?
But where I went in my head is that that can be traded. So I went to equity
Yeah.
traded.
It could be, yeah, but it's not a fund.
Yeah, yeah,
Right? There's no custodian. In an ETF, your own interest in a pooled portfolio of the securities. That's not what you own in an ETN. What you have is a promise from a sponsor to pay you X number of dollars. The efficient market hypothesis maintains that securities prices adjust rapidly to new information, with securities prices fully reflecting all available information. In other words, markets are efficiently priced as a result. There's three versions of the efficient market hypothesis based upon the level of available information. One of those, the strong form, specifically points out that abnormal returns cannot be achieved through the use of kind of an interesting way. I'm going to write this one down. This one's
I
kind of
would say C, active portfolio management. No, 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 no. It cannot be.
mm-hmm. This is let's see.
So weak cannot be achieved by fundamental.
Yeah,
Semi-strong, it cannot be technical and fundamental. Strong is it cannot be by insider trading.
that's right. So you have an overview. I think the phraseology on this test, on this practice question or test question is kind of messy, but at the end of the day, it's pretty testable. Well, all three forms. I love what you did. You attacked from the bottom up. So remember, it says the
Yeah,
Brazilian points out that odd normals cannot be used through. That means nothing works. And those other two things, something does work.
yeah. So it's A, insider
Yeah,
trading.
good job. Excellent. Yeah, excellent.
Yeah,
I like this question. I wrote it down to share with others because I like it so well. But remember, weak form would be technical analysis doesn't work, but fundamental may. You did
yeah,
it perfect, right? Semi-strong means technical and fundamental doesn't work, but material non-public information does. And then the strong form says nothing works, right? So good job.
yeah.
Client needs funds for an unexpected medical emergency. If the client takes out a loan against the cash value of his life insurance policy doesn't pay it back, what will the life insurance company do?
Reduce the death benefit when the client dies.
Right on. But they're going to get paid back. An investor has her agent enter a sell stop at 60, limit 60. Following the order entry, trades occur 62.12, 60, 59.95, 60.06, 61. More than likely, the investor received.
All right, this is a sell stop. So
That's right.
slobs over bliss, so sell stop. That is under. So investor has their
Right on.
agent
It's
enter a
under the
sell.
market. That's important. So you're looking for now a trade at or through 60.
Yep. So
Trade
it's
at or
got to
through 60.
be, it hits,
It
so it
becomes
hits 60 on the second, right?
there.
62.12.
Yeah, let's just go ahead and boom. So you're I love how you're going to attack here. So now it's a live limit order.
Yep.
Live
There.
limit order. Let me just get my
It goes back down. So it
you
does
won't
not get
accept
triggered
that.
at 59.
That well, it's triggered at 60, but you won't accept. You're correct. You won't accept 59.95.
Correct. So it's got to be accepted at 60.06.
Beautiful. Beautiful. Let me clean up my boom.
All right.
The formula for computing the combined equity in a mixed margin account is
All right. The formula for computing the combined equity in a mixed margin account is, whoa, okay, I haven't done one of these in a while.
yeah, I'm with you. I'm with you. So
Credit balance in the short account minus current market value, long position plus current market value, or current market value of long position minus the credit balance in the short account minus the debt balance in a long account plus, ooh, I'm gonna write this down because that's how I remember it.
yeah, I'm with you. I definitely think that's the way to go. And remember, though, like I say, don't let it, Matt, throw you for a loop or much too much because remember this is the 12 questions in, and we got a margin question. So that's the challenge is to say, okay, how much time am I going to devote some of these things? By the way, even if you're as your tutor, I wouldn't have been upset if you missed that previous one. That was a good get, right? So there's some that were, you're gonna, you're not gonna get 100 on this. Maybe you will.
Yeah.
You're pretty good.
So I know right off the bat what I did like about B was the current market value, but it's not minus, it's plus. So I believe it's got to be D, current market value of
What
long
I
position
love,
plus.
I love how you're attacking that question, and here's why I love how you attack that. This one, I'm on the fence about whether I'm going to share it, but if I did share it because of what you just said, I'm paraphrasing, what I think you were articulating is that you knew the current market value of the long account is an asset. The
Yeah.
credit balance on the short account is an asset. The market value of the short positions is what you owe, securities, and the debit balance is what you owe. So excellent. That was every question is only worth 1 point, but if I were in charge, I would give you more points for that because that's a,
Yeah, I appreciate
a
that.
different level of understanding. 181.0503 mixed margin. I think that's a good get. All right, let's see next one. Which of the following statements best explains the primary risk in investing in a principal protected note?
The derivative portion ensures that investors will always receive both their principal and positive return at maturity. Zero coupon bond portion of the note guarantees repayment regardless of issue or solvency. The principal portion depends on financial strength of the issuing company, so the issuer fails protection. The note is backed by the U.S. government, so low, only the risk is lower than expected performance. The derivative portion ensures that investors will always receive both their principal and positive return. So that's the last four words is tripping me up. The positive return at maturity.
Yeah,
That means they're going to profit at maturity,
yeah,
correct?
that's what that means.
Okay. Principal protection depends on the financial strength. So principal protected note.
So who are you getting that note from?
Um, oh no, I got one more thing to read. The zero coupon bond portion of the note guarantees repayment regardless of the issue. So The only reason I don't like D is the only risk is lower than expected performance of the under. Yeah, I'd say D is the answer.
Well, yeah, but you don't have that note. The insurance company is one making a guarantee and saying, Mitch, we have treasuries or zeros that will mature at this and make sure you can pay your principal. But I'm actually the one holding those securities. And if I go under, who knows if you're going to be able to access that underlying, zero coupon bond. First miss, not a bad miss at all. And I haven't on debrief anybody ever tell me they saw anything about a principal protected note. So, I wouldn't worry about this.
PPPNs are only secured as the
Yeah,
issuer.
because the point is the note is coming from the insurance company, not, they may, I could tell you, hey, Mitch, I'm going to buy a zero coupon bond just in case I blow up. You don't have any worries. And you say, okay, Dean, deposit that in my own account, will you? Because all you got is my word saying that I'm going to make that good, and I've got the access to do it. So first miss, 13 in, and not a bad miss. What we're looking for when we're doing shared screen practice test, mention your performance is awesome. I haven't had anybody on debrief tell me they've had this a question about principal protected note. The bigger concept is just the guarantee of anybody other than the US government is only as good as the guarantor. That's the big picture in this as a test item. Second thing, I haven't said one time to you bad miss. I haven't said one time said angels weep for you. In fact, I've said the opposite. I wish Mitch could take a test where you got more than 1 point for some of the questions you've already got correct. So, a federally covered investment advisor feels that some recent industry regulations will limit his ability to provide returns to clients that both he and they desire. Okay. He communicates this to his clients and urges those who are willing to sign an agreement. Ooh, very testable. Waiving their
Mhm.
rights to take legal action in event of the loss due to his refusal to follow these rules. This means,
Clients would still be permitted to sue because there is no way for legal rights to be waived. That's a yes.
yeah, very much the test question,
Yeah.
right? I
Yeah.
can't say, hey, Mitch, just acknowledge if I'm ripping you off that you will not hold me accountable for that. So the way we say that is no hedge clauses in a contract. I can't ask you to waive anything that's incongruent with the Uniform Securities Act.
I just took a test, and it was no hedge clause, and then
Yeah.
the next one was exactly basically hold harmless.
Yeah, that's exactly right. The one I
But it
like,
was A and B, and I picked hold harmless because that's in my
yeah,
rule. But
well, you
it's not
should, yeah,
hold
you should know your
harmless.
principles at risk. The one they like to do is like, hey, Mitch, could you acknowledge here that I can't assign your contract without your consent? Here, you're waiving that and saying I can't assign it without your consent. No,
Okay.
right? So
So
that's
it's
something
I just got to remember it's hedge clause.
yeah, it's called a hedge clause, something that you think the legalese is going to
Yeah.
absolve you of responsibility, right? It's not. Current market interest rates are 6. A bond has a coupon of 8, would most likely to have a net present value of. That's kind of an interesting one.
Current market interest rates are 6. A bond with a 8% coupon would be most likely to have a net present value of 0 when the bond is have a net present value.
This is another one that's kind of interesting. I'm not sure. I like this one, and if you get it right, I'm going to give you more than 1 point, and then I have to decide whether it's worthwhile to share with anybody.
So net present value tells me
Net present value, very testable, is the difference between the future value and the present value. And I think that's the key to the question, by the way.
well, if it's selling at par, the current, it's got to be what I'm currently yielding.
Wait, you're definitely on the right track.
So it's
If it's selling at par, you would have positive net present.
correct. So if it's selling at premium, I'm going to have a net present value.
Well, remember it says of 0. So let's go through these. You correctly told me B, if you could buy a bond with a coupon of 8 for par when brand new bonds are paying 6, that's a deal, man. That's positive net present value. That bond on B, you told me, I'm paraphrasing,
Yeah.
that bond is undervalued. Well, if that bond is undervalued, then C is even more undervalued. right?
So
Yeah.
yeah,
So I mean, even a better deal, right?
yeah. So
We're on
this
the right track here. So now we're saying which one of these prices is most likely to give me no difference between the present value and the future value, or the way my friend Brian Lee says it, is this idea of zero net present value, right? Where the market price and the future value are the same, the net present value.
called for redemption. I mean, I'd say called for redemption then.
Well, that would be the call price. So yield to call would typically not be on a bond at a premium, a good deal. And that's the key on this question. This
Okay.
bond would be selling at a premium, right? You told me
Yeah.
this correctly and that correctly. So if that's a good deal, that's a good deal. Getting called is not a good deal for you.
Got it.
That's the good deal, right? I like that. That's a very high end version. So I didn't say don't worry about it, as I've said in the previous couple questions. What I did say is I say this is a more complicated way to test you on this concept of net present value, the difference between future value and present value. Present value usually is the market price of the bond, right? But if there's a zero, right?
So I like how they explain that. The only way for a bond with an 8% coupon to have a yield maturity of 6 is selling at a premium. Now,
Yeah,
okay.
you were on the right track. I think you were on the right track.
Yeah.
I'm glad that you got B and C. Now, the other thing I would tell you as a test taker, God knows we don't need tricks here. You're doing fantastic. We only use tricks when all else fails. But we could have said, and you were on the right track, and maybe it's me for jumping on top of you, but you were on the right track. I saw you doing your teeter totter. You were talking about the par and selling at a discount. And once you told me that B and C were good deals, positive present value, I wouldn't even looked at D. I would have just said, well, the premium is the different one
Yeah.
here.
Yeah.
Under the Uniform Securities Act, which of the following is an investment advisor? Is an investment advisor.
Under the Uniform Security System, an individual who provides financial advice over the internet with no recommendations based on specific investment solutions. A broker-dealer who receives no compensation for investment. Okay. A firm with no office in the state that has provided specific investment advice to 10 non-institutional clients within the state during the past 12 months. An investment advisor representative. Is an investment advisor under the Uniform Securities Act. It's got to be C.
Yeah, right on, right? Boom.
Yeah.
BFG's 5% convertible bond is trading at 120. The bond is convertible at 50. An investor buys the bond now and is immediately converted into common stock, would receive.
5% convertible bond is trading at 120. The bond is convertible at $50. A bond, but an investor buying the bond now, immediately converting it into common stock. Investor buying the bond now, immediately converting the bond to receive 20 shares.
Excellent. I was worried if you were going to outsmart yourself there, and you did not. Good job. Different question would have been, what is the parity? That would be 12
Yeah.
divided by 20. Good job. Excellent. On the Uniform Securities Act, this statement, as I told you, I'd like to read that last sentence first sometime just to kind of see where this paragraph ends up. I also like sometimes on these paragraphs to read the answers that are being offered to me. Complies with the fiduciary liability, an improper waiver. Ooh, we like improper waivers because then we know they're going to test us on that. So this kind of helps me sometimes. This could be wrong. One day I'm going to write a practice test that just has answers and no questions, and just play around with whether this is so. Uh, I haven't read this question, but I like B a lot. C offers protection to the client by limiting those acts for which the advisor can be sued. I don't like that. Clearly defines the parameters of the advisor's responsibilities. I like the B and the D choice here, and I like B before I even read it. An
For sure.
investment advisor's contract contains the following statement. While Jimco Advisors agrees to use its best efforts in the management of the portfolio, Jimco shall not be responsible for errors in judgment or losses incurred on investments in good faith, and its liability should be limited expressly to losses resulting from fraud or malfeasance or from violations of applicable law. The USA, this statement is.
It's B. An improper waiver makes contract null and
Yeah,
void.
I like it, right? So there we go. So my B answer ended up being right because I just know that's what they like to test me on. By the way, the other reason I like to do that sometimes is because it helps me with the grammar. You know, Chuck Lowenstein is the subject matter expert at Kaplan in charge of this Q Bank, and I joke in a loving way he's a bigger jerk than the real jerks who write the test. And every time I call him out on poor grammar and things that I think are a little outrageous, he said, "Well, Dean, would you agree the test has poor grammar?" I say, "Well, yeah, okay." Under the Uniform Securities Act, when may an investment advisor legally have custody of monies and securities belonging to the client?
If the administrator has not prohibited this practice, if the investment advisor has notified the administrator that it has custody, only as long as the advisor does not also have discretionary authority over the account. It's one and two.
Yep, right on. Good job. I'm clicking quick for you because remember you said you want to trust your gut, and I want you to trust your
Yeah.
gut, right? So, I had a guy in my earlier session, and he's scoring where he should be. He's not scoring as well as you, but he's scoring where he's not at risk. And he said, Dean, it's only taken me like an hour and a half. I go, well, that's a good thing. That's a champagne problem. There's no problem with that. I wouldn't want you just because you have extra time to start reading the questions again. Just, matriculate down the field into scoring position, right? Although customers of a broker dealer can receive a stock certificate upon request, in most cases, the certificate is held by the firm, registered in its name rather than the customer. I say, hey, listen, I can do a lot of things backstage for you, Mitch, if you leave your securities in the name of my broker dealer.
Street name, B.
Right on. Remember down in margin account, the other question is you have no choice about that.
Yeah.
If the risk-free rate of return is 3.5 and the expected market return is 9.5 and the beta of the stock is 1.3, what is the required return on the stock based on cap M?
Yeah. So this is where, okay, what is required return in the stock according to cap M? So the required,
Yeah, so the
so we
way
do
I
nine and a
Mhm.
9.5 minus 3.5.
I like it. You're on the right track, which is six.
Okay,
Good job.
which is 6.
Right on.
And then you, is it times? Then you times it by 1.3.
Right on.
So that's 7.8.
And then you got one more step there.
Yep, 7.8. And then you plus 1.3, which is beta,
No,
plus,
you're gonna plug back in the risk free, right?
so is it 3.5 plus 7.8?
Yeah. Yeah. And then you
Okay,
just
so
go
it's
with the
11.3.
right on. Good job. Excellent.
Yeah.
There's the formula, right? Whoop.
Because the 9.6 wasn't an option, so I knew I was wrong.
Yeah. Well, by the way, listen, I was wondering what you were going to do here, and I'm as your tutor proud that you decided to hang in there and do the math. Here's what I like about a margin of safety that you have and demonstrated so far. I, as your tutor, would not have been upset if you decided to assign that to the universe and move on and say, you know what, Dean, kind of complicated. And by the way, the most common mistake, and it's kind of weird, is to add back in what you could have got without risking your capital, right? So that's where most people get hung up. They take forget to put back the 3.5 because you got to overcome that hurdle. I kind
Yeah,
of think of that as I don't know myself. I think of the 11.3 as our hurdle rate of return, right? That's the rate of return that makes it make sense. So good job. Another good catch. In October of 87, the SEC promulgated release IA 1092, which had the effect of broadening the definition of an investment advisor. As a result of the release, which of the following would be included in the definition?
Which of these would be included in the definition of investment advisor?
Yeah, they didn't think they had to register, and they were told specifically that they are investment advisors and need to register.
Okay. Commercial banks offering comprehensive financial planning for their high net worth clients. Entertainment agents earning a fee for negotiating contracts for the clients and then placing a portion of the client's royalties in investment grade bonds or large cap stock as market condition dictates. Persons who receive a nominal fee for assisting employee benefit plans. Administrators with selecting investment managers for the plan's assets. A nominal fee. Okay. Lawyers who prepare trust agreements for clients with large security holdings, that is a no. Commercial banks offering, they're not getting a fee for that.
Yeah, I love it. Good job.
So it's got to be, I know it's two for sure, and then a person receiving nominal fees, so it's two and three.
Excellent. I love how you did that process elimination. Remember, they love to try and trick you with pivot words like, oh, it's a nominal fee. Does not matter. Now, if it just said you are an attorney or an agent for a celebrity or athlete and you just negotiate their contract, period, well, then no. The part that
Yeah.
makes you an investment advisor is when you start managing the person's money for them, right?
And the only thing, one doesn't work because they don't charge a fee for it.
That's right.
Got it.
Right on. A client purchased a security for 60 and sold it 1 year later for 59. If the client received 4 quarterly dividends during the period stated as a percentage, the total return would be. Client received 4 quarterly dividends of 50 cents.
I mean, I've got 1%, 1.67%.
Yeah, I'm going to take one. Yeah, let's see, there's lots of ways to do math. I had a guy, I'm very much, here, and I hit the Zoom link. He goes, Dean, I'm a math guy and I'm not paying you to, do math. I said, okay, well, you're not going to get a whole lot of math. Total return is certainly testable. I just netted this out and let's see if I come up with the same answer you did. I 4 quarterly dividends of 50 cents is $2, right? And so I lost $1 on the stock, so I had $1 in income, and I'm going to take the dollar divide by 60 and see if that's one of my choices. And it is. I come up with the 1.6. Is that what you come up with?
Yeah.
Yeah. So, whether I want to do it separately or do it together, let's see what the rationale, how they did it. Yeah. Boom. Okay. I just netted that right out of the gate. When does a customer have to receive the OCC disclosure document?
It's the OCC is the options. It's a C, at or prior to.
Right on. Good job. I thought they might get you on that one because a lot of people, that's so easy. They read over it too quickly and then they say 15 days. No, 15 days is what has to be back, the agreement saying you read it and understood.
Yeah.
Excellent. As defined in the Uniform Securities Act, an investment advisor.
As defined in the Uniform Securities Act, an investment advisor is any person who is for compensation engages in the business of advising issuers methods of raising capital. Is any person for compensation engages in the business of advising others as the value of securities. Must be organized as a corporation or partnership, necessarily. Is any person who, for compensation, engages in the business of executing transactions and securities of others. That is a broker. Any person for compensation engages in the business of advising issuers on methods of raising. So, process of elimination in my head, it's B because it's got to be B.
Yeah, I like it because those other job functions are different people, right?
Yeah.
That's a broker dealer. A is a broker dealer. There's no rule that says you can't have an LLC as an investment advisor.
Yeah. Or a sole proprietorship.
And
Yeah.
then, yeah, exactly. And then D is again a broker dealer, right? Transactions. Good job. Here are the past 7 years of returns for XYZ common stock: 17%, 3%, 13%, 3%, 5%, 9%, 8%. As a measure of syndrome tendency, the value 8 most accurately described as.
Eight's got to be the median.
Yeah, I'm just looking at the numbers, and before I was
Yeah.
grabbing my calculator trying to decide if I'm really going to have to add them all up and divide, but right on, right? So, yeah, right. So, boom. And by the way, I actually do that. Uh, I think it's actually more likely you're going to get a simple average on the test if you have to do it. It's going to be in relationship to dollar cost averaging, but it is what it is. All the following are characteristics of investors exhibiting herding behavior. So one of these, you're not a member of a herd.
Except they maybe trade
Yeah, that's right.
contrary
So
to
something that makes
information
you
believer.
not a herd.
I mean, right off the bat, A was a not member of a herd, so they
Yeah, I
made
think that's a
it. Yeah.
contrarian. I'm with you. I
Yeah.
don't know if we want to just shoot at the A. I like it a lot. Let's see. Oh, see, they got us. They suckered us with that one. So let's see. They follow the actions, but only if rational. Okay. They may trade contrary to the information available to them. I think we missed that because of others. Let's see what Chuck says. Early behavior involves individual. I wouldn't worry about it. But we do get behavioral finance questions. We don't really get the herd, but we get the hubris thing where somebody's overconfident. We get the anchor where they have a position there for
Yeah.
future generations. So you'll get one or two of these kind of questions. An analyst wishes to assess the value of fixed income security by taking the income payment scheduled to be received over a given future period and adjusting for the time value of money. I like this. This analytical tool, this valuation technique is known as,
B.
yeah, I like that. This is, by the way, that more often than not, that is the question on some of those high end analytical questions. It's just recognizing the definition, flashcard stuff, right?
Yeah.
Duration is the volatility, the nonlinear relationship of volatility. That's that long maturity, low coupon thing. And then future value is, what we're trying to do is discount the future value back to present value. So by doing this, we come up with present value. And then we had that previous question. Then we compare that to the price to decide if we want to proceed or not. A non qualified, so every time I hear that as a test taker, I think after tax, not through my employer. Non qualified. Single premium variable annuity differs from a Keogh plan in that. That's interesting. So that kind of took a U-turn on me and ended up being a much different question than I thought it was going to be.
Or differs. It is open to self-employed persons. Both are subject to early withdrawal penalties. A non-qualified single premium variable annuity differs from a Keogh plan in that earnings are taxed.
What this question is getting at is very testable, but again, here's another where Dean kind of disagrees about the flavor as compared to the real question on the test. In other words, my opening comment about that non-qualified was indeed important answering the question.
I'm Payouts are fully taxable in Keogh. I mean,
So I said a non-qualified, I think, okay, after
yeah,
tax.
after tax money. So, I mean, a variable annuity after tax it's got to be D.
Excellent. That's exactly right. Because the KIO, everything coming out is taxable.
Yeah.
Because you have no cost basis in it, right? Whereas you have a cost basis in that non-qualified variable annuity,
So
right?
yeah. Yeah.
Right. So I like the takeaway from this. I don't really like the way he's asked the question, but I do like the idea. What they're trying to get at is that in a non-qualified variable annuity, you have a cost basis, and so you won't owe taxes on the entire distribution. You'll owe ordinary income tax rates on the difference between your original contribution and whatever it is today. If we were using the DCF cash flow, DCF, to appropriate value security, you would want to purchase the security when
Hey, the current market price is below present value.
it's kind of backwards too. Good job, by the way. But what I mean by it's kind of backwards is because that's called positive net present value, right? So again, you can get hung up on the grammar. At the end of the day, you got it right. Oh, come on, Kaplan. What's going on there, buddy?
How
Loading.
many of these do you do a day?
I don't do more than one a day because I don't think it would be fair to you for be my fourth guy, going
Yeah.
over because you got to go bonkers. I even tell you guys not to do more than one a day either. So I had a session earlier, but it was just going over a couple things he had on his team to do list. Okay, come on. I don't know what's going on here. My internet says I'm okay, so I hope this isn't a
So
Kaplan.
while this is loading, I was taking a test earlier and
Uh,
it said basically it was talking about passive investments, right?
uh,
And two of the answers, I picked 401k. I don't think you can get any more passive than just plugging your number in and boom,
yeah,
right?
yeah.
But the answer was indexing, right? Index fund, which I understand is the reason, but how is that? Are we splitting hairs there?
I think so. I don't think that's a testable distinction. I'm just seeing what's going on with our friends at Kaplan here. I don't want to not load this thing because unload it. Let's see.
Let me use the restroom while this comes up.
Absolutely, absolutely. And our connection's good, so that makes me think it's on Kaplan's end.
Hi. Still not nothing?
No, I don't know. This is gonna be bad. It should let us back in at this number. Let's give it a couple more minutes. If not, we'll take a break and we'll just reconvene in 20 minutes and see. Yeah, because I'm this is from Kaplan's website, but our connection's good, so that's what makes me think it's not my Starlink and it's not you. It looks like it might be Kaplan's website. Maybe too many people doing this. I've never had this problem before, so maybe
Yeah.
I've just been getting lucky. Um, Let me see if I can reload it. And then 30, we're in question 31. So again, let me back out of this thing again. Next. All right, here
How
we
long have
go.
you been doing this?
Oh, helping people pass tests?
Yeah.
Oh my God. I've been at it decades, 3 or 4 decades. I'm a retired stockbroker, so I disappear and do things and come back to it. But I started the YouTube channel. Is that how you found me on the YouTube channel?
Yeah.
I started as kind of a side hustle during COVID. I was joking the other day. It's actually taken, I'm a one-man band. So people say, oh, you should hire people and you should, start competing against Kaplan. I go, nah, no, that doesn't speak to me at all. But, that's why I always tell people, hey, feel free to nudge me like you did because, I get hundreds and thousands of
I
other
bet you
people.
make more money. You don't need to tell me. Make more money on your YouTube channel now than
I
you.
do, and that's kind of where I'm at. I'm in that quandary. You're absolutely right. Between my retirement and my YouTube channel and my commissions and residuals, even though I charge a high rate. So thank you so much. But it really, there's days where I feel like, oh man, I want to be at the cigar lounge smoking cigar and drinking scotch, instead of doing. Okay, let's just see now if it comes back up.
You're a Scotch guy, huh?
Yeah, well, tequila, scotch, I just like I say, Oscar Wilde said, "Work is the last refuge for those who have nothing better to do." And on some days I have other things. So, but your point, I only got you for this today, so that helps a little bit. Now, I'm not sure. Can you see is the exam back
Yep.
up there?
I see the ID question.
The ID question. Okay, let's try this again. Boom. What do you see now? You see the ID question still?
Yep.
Okay, let's see. Let's shut this down.
Question ID 181
Okay,
something.
let's try it again now. Okay, now, okay, let's go back. Screen sharing stopped. Boom, boom. Do, do, do.
What's the temperature where you're at?
We're trying to decide if Mother Nature's been kind to us. I'm in northern Arizona, off grid. It was 20 this morning, but we've been
Oh,
having
wow.
beautiful evenings, and so that has been very helpful. Securities ProBank, 100 in progress. Okay, I think I've got us fixed here. Let's hope. Just
Awesome.
a sec. Where are you at?
Iowa.
Oh yeah, we talked about that. Yeah, that's
Yeah. I live
not
in
many
Iowa
mountains in
City where the
Iowa.
university is.
Yeah, I told you. I love those Casey General Store things.
Oh, the Casey's
I was
Pizza.
teaching I was teaching a let me go find you, and they were telling me about this breakfast pizza at Casey's
Uh-huh.
General, and I made so much fun of them. I said, "Oh, come on, you can't they can't really be a breakfast pizza that's any good." And I'm going on and on. And the next morning they brought a couple of those to class, and I'll be damn, that was pretty damn good, you know. All right, let's see if we got it back. Are we back up and running now?
I started sharing a screen. Yep, we're
All
perfect.
right. Oh God, thank God. In order to compute the real rate of return, it would be necessary to know all the following except.
The real rate of return, just beta security and real rate of return. So you want to do, no, this is, all right. So CPI is in it. Purchase
Absolutely.
price is
That's the
in it.
big one to know that's in it. So good job. So
I mean, except it's got to be beta security.
I love how you're attacking these questions. I love it. That's absolutely right. Right. So you got the big test is it's CPI, right? Then you got to know what you made, right? So you need the purchase price, and then you need to know how much income you got. So excellent. Why must an investment advisor carefully assess a client's risk tolerance before recommending leveraging strategies?
Is leveraging incurs on short-term risk, long-term, because leveraging eliminates the need for volatility in the market. Because leverage can quickly magnify losses, making it unsuitable for clients and company. Yep. Because leverage automatically balances. It's C.
Yeah, that's a layup.
Yeah.
Ooh, my goodness. Yes. Okay, so I like to read the last sentence first. Each access person. Okay, so now I know what this paragraph's about. Must provide the chief compliance officer with written record of a person no later than. So that's what they're testing me on. I have 30 days, 10 days, 45 days, 30 days. Okay, at 204A of the Investment Advisor Act, any person, boom, boom, boom. Okay, so now you're getting tested on what is that day.
Okay, so each access person must provide the chief COO or his or her designee with a written record of his or her personal transactions no later than it's 45 days after each quarter, 30 days. Um, yeah, 10 days.
It's actually, this is not a bad miss. If you have to guess, I would go with 30 days. 30 days is the most common thing, but I wouldn't worry about that at all. Maybe you think about 13F. I think the F to 10 days or this S4, that could have been the right answer, a different question, but this is 30 days after each.
After the quarter. Yeah.
Yeah, that is a test question, but no, like I say, if we look at all that green, that's the great thing about all that green is no one question puts you at risk. And so, but 30 days is a common number on this test. So if I don't want you guessing, but if I had to guess, I would go 30. An investor evaluates a bond with a present value of 1200 and a market value of 1200. The investment advisor's representative is asked whether the bond is underpriced, overpriced, or fairly priced. The representative should reply,
The investor evaluates the bond with present value 1200. The market price is 1200. The investor represents is asked whether the bond is underpriced or price fairly priced. The NPV is zero, which meaning they're fairly priced.
Excellent, excellent. We've got some good examples of these MPV questions. Kaplan does a pretty good job on those kind of questions in terms of how it reflects the actual way it's tested. After receiving some money from an inheritance, an individual purchases a rare gold coin for 10 grand. 5 years later, gives the coin to his daughter-in-law. So I always like in these questions, I like to go, okay, he's not dead. If he's dead, it's different, right? After receiving appraisal that the coin is worth 15,000, the daughter-in-law's cost basis is.
I mean, it's zero because the gold coin isn't a security, right?
Oh yeah,
Or,
yeah,
or,
yeah. I don't know if that's what he's getting at. You may be right. I'm reading this. I would have said A. Are you going to say B? I think you might.
well, I hear you because if how I read, it's not a security.
Yeah,
If it's
you're
a
absolutely right. It's
security,
not a
it's
security.
10,000.
I'm reading it as a gift. So what are you going to go? You going A?
I'm
I'm
going to
going
go
A.
zero because it's not a
Right. I bet you probably
security.
got it right. No,
Ah,
yeah, I got it right.
and
The only reason
if
I
it
got
wasn't
that
a
right,
gold coin, I would have had that
yeah, the
question.
only reason I got it right is because I know that's what they want to test you on. Is the difference between gifting something. You
Yeah,
probably think you got a little too focused on whether the something is a security or not, and it's the
yeah.
something, right? So it doesn't really matter that it's a coin.
I know. Yeah, I know the
You were
premise
right though.
behind
Here's an
that.
example, right? You were correct. It's not a security, but it really wasn't about it. The security it was just about taxes in general. So I like that because it's one of your few misses, and it's you overthinking it, which is not going to put you at risk. But
Yeah,
I like that. I'll call that a good miss just because that's by the way, the other one I would have been prepared for is he dies,
yeah.
and then it's C, right? Step up, whatever that price was. Mary teaches physics at the local high school, makes 70,000 a year. She could maximize her annual retirement savings by participating in.
It's a 403 and a 457 plan.
Well, yeah, 457 would be deferred comp,
Yeah,
absolutely. So yeah, and then the 403B, and that's very testable to who qualifies for the 403B. And I think I nailed it on the 457 because again, I think of that as for employees, public employees as well.
yeah.
If XYZ is a registered broker dealer with its loan office located in state T, as in Tom, under which of the following circumstances must it also register in state L?
XYZ only dealing in state L or directly with issuers, engages in extensive transactions with the largest insured company in state L, routinely sells non-exempt securities to extremely high net worth residents in state L, purchases securities from extremely high net worth residents in state L to resell to state T. Um, it's 3 and 4.
Excellent, excellent, excellent. When does a deliberate omission of a fact in a security sale constitute fraud?
When does a deliberate omission of a fact in security sale constitute? Anytime the information is known by more than 15 people know. If a reasonable person would base an investment decision on the omitted information. It's C.
Yeah, I don't like the answer set, but given this answer, that's the best one
Yeah.
because material information is that. That's what it means. It's something that would alter your investment decision, right? I saw a broker being interviewed on the front page of the Wall Street Journal, and he asked why he didn't tell the client this information. He said, "I thought I'd lose the sale." That is the worst answer of all time. I'm supposed to say, "Hey, Mitch, it might alter your decision, but something ought to know." Under the Uniform Securities Act, which of the following is included in the definition of an investment advisor?
Broker or dealer sees a flat fee for analyzing a customer's investment objectives and recommending a portfolio of securities. A publisher that receives a yearly subscription fee for newsletter that provides non-specific. A bank that offers investment counseling to its high net worth. An antique dealer who receives a flat fee for advisory. It's A.
Yeah, I use the Sesame Street trick on this one. One of these things is not like the other, right? Which of the following statements is true regarding the jurisdiction of the SEC under the Securities Exchange Act of 34?
The SEC has jurisdiction over exchanges and SROs. SEC has jurisdiction over broker-dealers, investment advisors, and associated persons that are required to be registered under federal law. So is that saying they don't have restriction over state?
Well, yeah, they're saying that within the states can supervise.
Got it.
Right.
The SEC has jurisdiction over banks and savings and loans regarding their securities activities. I think it's all of them. One, two, three.
Yeah, I think so because it says securities activities, but
Yeah.
here we're not sure what securities activities they're discussing, right? And so when we read the rationale here, maybe Chuck's going to tell us that, what savings and loans and banks are doing in terms of buying and selling securities for their own portfolio or something is not a problem. I'm not really worried about our rationale and excluding three as much as that we should know it's definitely one and two. Let's see what Chuck says here. The SEC was created, banking authorities such as Federal Reserve Board. Not a really great rationale here.
Yeah.
Because it all pivots on how we read that word securities activities, right? So I don't feel bad as your tutor about
Got to
that.
pick it up here.
If a client wishes the assets in her account to pass directly specific beneficiary upon her death, very much a test question.
TOD.
Right on, very much a test question. Jim contracts with the XYZ Advisory Service the design of a financial plan investment advice. He pays an upfront fee when the contract's signed and receives a disclosure brochure. After 3 days, Jim decides to cancel the investment advisory service, which of the following statements is true.
He pays an upfront fee when the contract is signed and receives XYZ disclosure form at the time. After 3 days, Jim decides to cancel the investment advisory service according, which is true. The contract is binding and XYZ has no obligation to return fees collected. The advisory fee must cancel the contract, but may keep all fees collected. The advisory team must cancel the contract, but can keep a prorated amount of the fee as compensation for services performed by the cancellation date. The advisory fee must cancel the contract and return all fees. So this one's tricky to me because yes, it can be obviously it can cancel. You can cancel it at any time.
Right.
However, it doesn't disclose how much fees they collected,
You're
so
on
you
the right.
don't know if it was excessive or what prorated is, you
Yeah.
know.
Mhm.
So my gut tells me it's C.
You are correct. That's the most reasonable answer.
Yeah,
Now, another way, we don't use tricks unless all else fails, but too long to be wrong. Right? Too long to be wrong. When people write questions, even like Chuck here, or even real test writers on the test, a lot of test writers start with their correct answer, then write their question, and then write their
yeah.
wrong answers, distractors, and sometimes they fall prey to that. But also, that's the most reasonable thing for me to say is, hey, Mitch, you know, I might give it all back to you. We have a restocking fee, if you will. Which of the statements is not true.
Federal covered securities include those registered under the Investment Company Act in 1940. Federally covered securities include securities listed on the National Exchange. Transaction exemptions must be established before each transaction. Exempt securities must reestablish their exemptions at least annually. My gut reaction says D.
You are correct, right? Because you never have to comply if you're an exempt security. You're never going to
Yeah.
do it, right? So, right on. High net worth clients of yours invested 250 in an oil and gas limited partnership, for which he received a 10% interest. Unfortunately, after 2 years of drilling, the project was foreclosed with outstanding debt of four. Your client's liable for creditors.
This is the man LPPs I haven't talked about. Limited partnerships I haven't talked to.
Well, I got to
Studied
tell
a
you,
little
Mitch,
bit.
it's always the challenge on these exams. I'm not so sure it's worth going down the rabbit hole to get to a point or two. The main test question is these are not liquid, right?
So yeah, so limited, this is different. So oil and gas is different than a standard limited
Well, not
partnership.
really. I mean, you put in 250 and the creditors come after you. What are you going to tell them?
It's you're liable for 250.
No, I say, listen, I'm a limited partner. I lost my 250. What can I tell you, right? All you can lose is your original investment.
Yeah, so
creditors come calling to you. I'm a limited partner in the Golden State Warriors or this oil and gas program or an apartment building. The minute I tell you I'm a limited partner, Mitch, I'm saying, hey, you have no recourse to me. You'll have no recourse to me unless I, as a partner, signed what's called a recourse note. Other than
Yeah.
that, I'm okay. I was
The
just reading
GP's on the hook.
today's Wall Street Journal had a story mentioned about they bought Kanye's old mansion,
That's
and the guy did a crowdfunding project to the idea is to restore this mansion. The guy has a prison record. I don't know this guy from anybody, but I'm just reading the story. The Wall Street Journal, and God bless these people willing to put it out there. They had pictures of each of these individuals who invested, and one guy put in 1,000, and he said, "Hey, it's just $1,000." So it was a lottery ticket. Then they had a surgeon who put in 50. Okay, well, that was a partnership, right? So they're saying they're foreclosing on the property. Good news. None of those guys are going to lose any more than their 50. I guess that's the good news.
yeah,
That's
that's the good news.
that the bad news is it didn't work out. By the way, though, if when I was reading the article, and this is unfortunate, but the state administrators and the SEC get good ideas from reading the Wall Street Journal. And boy, that certainly sounds like an unregistered securities offering to me.
Yeah.
'Cause, they were talking about the guy just asked for some more money from him. He come back saying, "Hey, Mitch, I need some more." Which of the following circumstances would require an investment advisor structured as a partnership to notify? So, key difference between notify and permission.
Which of the following circumstances would require an investment advisor structured as a partnership to notify all clients of the firm? The investment advisor hires another partner in the firm. The investment advisor opens a branch office in another state. The partner of the firm was disciplined by the firm. The investment advisor acquires the accounts of another firm. So let me ask you this because I'm going to start overthinking it. Notify all the clients of the existing firm, like let's say D. If they acquired a new firm, they'd have to notify those clients that, hey, we're taking over as
Yeah,
whatever.
if you take over the firm, then that's going to be consent.
Yes,
So there's a distinction between this idea of consent and this idea of notification. We've been doing pretty well on this. We should eliminate B pretty quickly,
yep,
right? A partner of the firm was disciplined. It depends what that discipline is. It could be internal. So I'm going to stick with
correct.
C. We acquire the accounts. That's none of your business if I get new clients.
Yeah. So it's A
Yeah, I like this. Usually they ask about a partner leaving.
or dying.
Yeah, not a partner that's joining us. But coming or going, that's notification.
Okay.
The Uniform Securities Act authorizes the administrator to make certain demands of broker dealers. In general, the administrator would not require a broker dealer to.
Uniform Securities Act authorizes the administrator to make certain demands of broker-dealers. In general, the administrator would not require a broker-dealer to publish an announcement of application for registration in newspaper, published in state. They can do that, but they wouldn't require. Post a security bond if a broker-dealer does not have an investment discretion over clients. Administrator would not file various finance reports, promptly file a correcting amendment to any document or file administrator that becomes inaccurate. So, so C, they would actually require. So that's not one of
Yeah,
them.
I like it. I like it. You're on the right track.
Post a surety bond if the broker dealer does not have the investment discretion over client accounts or does not maintain custody. So they would not require a broker dealer to post a surety bond if they do not hold custody or discretion.
Yeah, right on. Good job. That's excellent. That usually is not tested that way, however. So I just want to tell you how they do test that is that the state can't require a broker dealer to have different record retention.
From
Ours
the
is
SEC.
3, not 5. And they can't require us to have a different net capital standard, net worth standard. AMT becomes a consideration when a taxpayer has so-called tax preference items. Included in this definition this is very much a test question.
So overtime pay from job, no. Tips
Yeah,
from while working on restaurant, no.
right.
My gut tells me B, interest from private
That's
activity
right.
bonds.
Industrial development agency bonds or industrial development revenue muni bonds, right on. So you got it right. That's very much a test question. An unaffiliated person acts on behalf of an investment advisor to attempt to solicit or refer new advisory clients. Which of the following conditions is not required by the Investment Advisor Act of 1940 for the investment advisor to pay the solicitor $100 per month for this service? Now, I don't think on the test will be this complicated, but this is a third party solicitor, is what this is
Yeah.
about.
There's no outstanding SEC order barring the solicitor's activities. The investment advisor must register as an investment advisor. The solicitor must be registered as an investment advisor. Which of the following conditions is not required? Okay. Compensation exceeds 1,000 over the previous 12 months. There must be a written agreement between the solicitor and the advisor. So the following conditions is not required. There can be no outstanding SEC order barring the solicitor's activity. So, I mean, the investment advisor must register. B,
Yeah, right on. Remember this, we could use a broker dealer to do this for us. So the test questions here are going to be only federally covered investment advisors can use third party solicitors. In other words, if you're not a state, you got to do it in house. Secondly, there's got to be a separate brochure that tells you about the solicitor's role in the
agreement.
other person. Right on. The Investment
We
Advisor
missed
Act of
it.
1940, as amended by FINRA in 19 or NIMSI in 1996.
We missed that one, Dean. What was
Yeah, we
that?
missed it. Uh-oh. Oh no, I explained it to you, Greg. I just hit the wrong button. I said they don't
So,
have to be a registered investment advisor, so that's on me. I hit the wrong button. If you're a federally covered advisor, you can use a third party solicitor. So that would be a broker dealer can raise the money for you, find clients for you.
so if I'm a state, but but
Hey,
they
you
have to be
cannot.
registered, right?
Yeah, well, you're registered as a broker dealer. This is a third party. This unaffiliated person is a broker dealer.
Got
If
it.
Goldman
Okay.
Sachs acts on behalf of Fisher Investments,
Got it.
they have
So,
to solicit, right?
got it.
So yeah, that's on me. I just hit the wrong button. We said it right, but we hit the wrong button. On the Investment Advisor Act of 1940, an advisor is required to register with the SEC if
Advisor is required to register. Clients are investment companies registered under the Companies Act. The advisor is publisher is a newspaper article. Okay, the advisor clientele is exclusively federally access to 100 million assets. The advisor's advice relates to solely securities. Under the Investment Advisor Act 1940, an advisor is required to be registered with the SEC if the advisor's clients are investment companies registered under the Investment Companies Act. I
yeah,
would
this
say that,
you're correct. That would be Fidelity
yeah.
Management and Research, right? The advisors, B certainly not, C certainly not, and D certainly not. I probably did a process of elimination on that one. An investment advisor rep is evaluating DEF stock to see if it's a good fit within the client's portfolio. Using the security market line, what is the expected return for DEF if the return on the market's 8 and the treasury bill 6 and the beta is 1.5, CPI is 4?
Security market line.
As your tutor, I care mostly, CPI has nothing to do with this, but
Yeah. So this using the securities market line, what is the expected return of DEF? Oops.
I always immediately take the risk-free rate of return. I just subtract it right out of the gate. So I take 8 minus 6 because that's what I could have got without risking
Yeah.
money. I get 2. I multiply by the beta, right? And then that's where most people screw up because then I got to
So
throw
it's
back.
9.
Right on, right on, right. So you got to throw back. Uh,
So what threw me off there was the security market line. So tell
oh
me,
yeah, they just love to do that. That's just the fancy word for the capital asset pricing
that's
model.
what, okay. That's
So, and I told you that's more of a Chuck thing than a even though the test does that. So sometimes they'll throw out a new word to you and go, what the hell is that? Right. It's that's that, you know,
Yeah,
yeah.
the formula. I just didn't. I'm like, man, is it asking me something else?
Yeah, just, is there another way to say that? The analytical tool used to project the current value of common stock using projected future dividends, very much a test question.
Yeah. The analytical tool used to project the current value of a common stock using projected future dividends. I mean, it's got to be the dividend discount model.
It definitely is. Definitely is. Right? That's DCF is applied to a common
Yeah.
stock. I remember there's another version of it too. If it said an analytical tool used to project the current value of common stock using dividends that may increase over time, that would be called the dividend growth model.
Growth model, right?
And
Yeah.
then the test question is that would result in a higher valuation. And you can't use the dividend growth model on a preferred stock because the dividend is fixed. Under Uniform Securities Act, what is true regarding prepaid advisory fees?
It must be detailed in advisory contract. They may not exceed 2% of customers' deposit assets. Fees in excess of $500 for 6 months or more for service required. An advisor balance sheet to be included. They may never be accepted. What is true? I would say 1 and 3. So A.
Yeah, I like that. I would have done by process of elimination as well. I would have tossed out four.
Yep.
Right? That got me a 50-50, and then I got to take 1 and 3. So now I just got to look at two.
Yeah.
If there was any rule like that, we would have been tormented on it already, right? A federally covered investment advisor where the SEC has offices in 5 states. Who cares? Must do which of the following?
This is a federally covered investment advisor.
That's right.
Pay state filing fees if required by the administrator.
Yeah,
Notify the administrator within 1 business day if net worth falls below the required requirements. Notice file in any of those states where required by the administrator. Become licensed as a broker dealer. So take 4 off the plate.
right on.
Um, 2 is not true because you don't, if it's fairly
Right on.
covered, you don't need to notify the administrator. So it's 1 and 3.
Excellent, excellent, excellent. Which of the following statements best describes cumulative preferred stock?
Cumulative preferred stock. So owners receive an extra dividend along with common share. Now, owners are allowed to vote. Okay. Owners lose any claims to dividends. Owners have continuing claim to their dividend, and all arrears must be paid. Yeah, it's D.
Yeah, right on. Too long to be wrong. Woo, another long one. February 2019 report by the Consumer Financial Protection Bureau titled Suspicious Activity Reports on Elder Financial Exploitation and Trends reported over 180,000 suspicious activities regarding older adults involving more than 6 billion. Okay, all that's BS. It has nothing to do with answering the question. The NASA's Model Act to protect vulnerable adults from financial exploitation is an effort to reduce damage being done to many of those who can't afford losses. Under the NASA rule, Model Act, who qualifies as an eligible adult?
For an eligible adult for that act, it's C.
Yeah, yeah,
Yeah,
yeah, yep,
C.
yep, yep, right on. Yeah, most of us have. Oh, we missed it. Let's see.
Was it D?
Yeah.
See, that's where I held, or any adult
No,
18 or older who cannot
we
protect their
missed it because
financial
we
interests.
got to throw in the people that can't protect their own interests, even if they're, you know.
So, but would you not consider, or any or older who have been
Yeah, I'm not worried about this, miss. What I would want you to know as your tutor is how we do this. So every firm in its written supervisory procedures, this is a test question, has to have a section on how we try and prevent the exploitation of seniors. Your point defined as 65. Most of us do that through what we call a trusted contact person.
yeah.
And then that trusted contact person can give us permission to put a temporary hold while we put the temporary hold, and then we call them and say, hey, what's up? Which of the following are governed by the prudent investor rule?
Everybody.
Yeah. I mean,
No.
we should never not be prudent, right? An investment advisor rep receives a favorable research report on a company he believes will increase substantially in value. Over the next few months, he places 100 shares and the account of each of his clients for whom he has written discretionary authorization. This activity is,
It's got to be, and my gut reaction says C, the blanket recommendation rule is prohibited.
yeah, they're going to test you somehow, some way on that, on your exam. I say, listen, Mitch, everybody's situation is unique. An interstate broker dealer is headquartered intrastate, so they not headquartered conducts all business with the state O. All of his clients are state O, and all his transactions are in state O. The broker dealer does not participate in transactions on material securities exchanges. Which of the following statements correctly describes the firm's registration requirement?
My gut reaction says C.
Your gut reaction is so far had 100%. Oh, no. I thought you were right too. Let's see. The firm is exempt from federal SEC.
Is it because it's interstate?
No, interstate's within the state. It allows broker dealers kind of. Yeah, this is one of those really exceptions. I know of no broker dealer, so that is true. But I know of no firm that isn't registered with FINRA and the SEC. We know they have to register with State O, so that's on the two of us. I don't think that's a bad miss at all. But it is true that you could tell the SEC you're not in FINRA. Well, the SEC, you still have to register with FINRA. But that's one of those little minutia items under the template. Wouldn't worry about it, and I feel good about our miss. And to be honest with you, I'd miss it again the same exact way. I would say, hey, no, we're going to be registered. All along have legal standing as persons, except this is testable, who cannot be held legally accountable as a legal person.
Minor children.
Yeah, and people declared mentally incompetent, people now deceased, very testable. A corporation offering securities registered on 33 may make which of the following statements?
I mean, A, C, and D are out. It's got to be declared the
Yeah,
prospectus
I'm with you. I like
effective.
the way you attack that one, and that's how you attack that. I don't even like B, but hey,
Yeah.
my other three, that's the most sensible one. Dr. Howard dies. Which of the following life insurance policies would be included in his gross estate?
Policy one, owned by Dr. Howard. He is the insured and his wife is beneficiary. Yes. Policy two, owned by Mrs. Howard. She is the beneficiary. No. Policy three, owned by Mr. Howard. Mrs. Howard is the insured and he gave the policy to his daughter 5 years ago. No. Owned by Dr. Howard. Mrs. Howard is the insured and he is the beneficiary. So the only one, hold on, he dies. Which of the following life insurance policies will be included in his gross estate?
Yeah.
If he dies, number one for sure. So you can label it down to A and C.
There you got it. And you just told me that you gave me a perfect explanation of two and three.
So owned by Mrs. Howard, she is the beneficiary. So my question is he the insured of policy two?
No, owned by Mrs. Howard. She is the beneficiary. It's on his life.
Okay, so yeah, it's one and two.
Well, no, you had it right. It's one and four. You nailed this thing. You actually gave me the right answer. You went for one. You said one for sure. You said two, no, because it's owned by her. So it's not part of his estate because she owns it. I can own an insurance policy on you, Mitch. It might be suspicious about why Dean has you insured, but that's my policy, right? Originally, I
Okay,
owned
so it's
it.
not just because he's insured, it's that he owns it. So it's one
Yeah,
and four.
yeah,
Yeah.
yeah, right on, right on. By the way, you're
I
doing
think I talked myself out of that one.
You did, yeah. I thought first time I seen you do that, you actually, you literally said the right answer to two and three, and you knew you needed one, and I was just waiting for you to squeeze the trigger, and then all of a sudden, you start walking yourself back on it. You have a 70-year-old client with $500,000 in whole life purchased 25 years ago. The policy currently has a cash value of 150. With all the children of her own and successful, she no longer feels the need for the insurance and asks you, is there any option that might result in netting more than surrendering the policy for its cash value? You might recommend.
Life settlement, B.
Yeah, boom. An investment $2,000 that made 10 years ago, it's now worth 8,000. Using the rule of 72, the approximate compounded annual return is. So the first thing I would do as a test taker is note the symmetry in the question.
So it's doubled twice.
That's exactly the way to solve this. Right? So that means we got to double the money twice in 10 years. So that means we're going to double it once, and then we're going to double it again.
So in 10 years, it's doubled twice. So it's got to be, so 7.2 is that doubles in 10 years, but it's doubled twice. So it's got to be
Yeah,
14.4.
I like that. That's not the way I did it, but as I said about math, it's however you get there, and your way was just as good as mine.
How
I
did you
just
get there?
I just said 2 to 4, so I need 5 years. So I just 72 by 5, and that gave me 14. Right. So
That makes sense. Okay.
either way, I mean, you could, and sometimes people get freaked out. It'd be funny. Okay, let's just see here. Right. Let's see how rate of has doubled every 5 years. Okay. By the way, I was just reading the rationale. So don't get freaked out if you do your math. As long as you got the right answer and you read they did it some different way, that's fine. If you're not sure, then reach out. But there's a couple ways to do math. Under NASA's agency cross transactions of investment advisors model rule, which of the following would be prohibited?
Investment advisor organized a partnership giving written notice to all clients within a reasonable period of time that tells about retirement of one of the partners. This is a cross transaction, has nothing to do with that. Entering into written
I love
advisory
it.
contract.
I love it. I love that. By the way, I'm not being facetious here. I mentioned when you take the test, I want you to talk out loud just like you are now to yourself mentally. Has nothing to do with it. And when I'm taking a test, they come up and say, "Hey, Mr. Tenney, other people are taking the test." I go, "Well, look at this one, man. It has nothing to do with answering. You want to be as proactive as you can in these questions, and that just warms my heart. Yeah, that has nothing to do with it."
I mean, which of the following would be a prohibited practice? It's got to be failing to obtain written consent from a
Yeah,
client.
absolutely.
Yeah.
That looks like it might be complicated, but at the end of the question, it ends up being a layup because we go, yeah, that's got to be it. You need a little break? Are you okay?
Yeah, I've got.
You want to take 10 minutes and just pause it?
No, 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 no. You're
Okay.
good. You're good.
The registration of an investment advisor would automatically register which of the following as an investment advisor rep.
Registration of investment advisor would automatically register which of the following as investment advisor representatives. Directors, officers, partners. All of them.
Get right on. Section 28E provides a safe harbor for soft dollar compensation. Which of the following is most likely to be included in that safe harbor?
Software designed to give clients access to asset allocation. Okay. Desk remaining after the broker dealer designed its office. No. Meals, expenses to attend an investment. No. Use of vacant office space. No. So it's A.
Yeah, I like that bespoke.
And where I actually learned this on your YouTube videos, like
Yeah.
if it doesn't help the client,
It's out. That's exactly
yeah.
right. It's
Yeah.
about me helping your clients are my clients, right? They're your broker dealer clients, but they're my investment advisory clients. Which of the following does not violate the ethical requirements? So one of these things is ethical and three of these things are not.
Which of the following does not violate the ethical requirements of the Investment Advisory Act 1940? An IA is affiliated with a broker-dealer but does not tell clients that the investment advisory he offers is outside the scope of his employment with that broker-dealer, which of the following is not a violation. Okay. An IA, what? I've used products available through a number of different broker-dealers. In implementing a portion of the plan, the IA intends to act as an agent of broker-dealer with whom he is associated, but does not make this intention known. That's prohibited. An IA tells clients that the time is right to convert shares of money market to shares of growth stock fund without telling clients he makes similar conversion in his own account. And I intends to implement a financial plan using only products available through a broker-dealer with whom she is associated, but does not make this intention known to clients. Okay, so let me reread the question. Which of the following does not violate the ethical requirements?
And I think you're proceeding correctly to know that, the ones that are due, right? So
Say
if
that
I
again.
write an A, B, C, D on my scratch paper and put does or does not, right?
Yeah,
A, does, right? Does not tell clients he invites his office outside the scope of his employment,
that does violate.
right? By the way, they all have a common thing about this question. There's a common thing that makes the one thing ethical and the other's not.
The IA financial plan uses products available through a number of different broker-dealers. In implementing a portion of a plan, the IA intends to act as an agent of a broker-dealer with whom he is associated, but does not make this intention known to his clients. That disclosure makes it prohibited.
Yeah, B and D are major violations of this.
Correct, yeah.
So
A or C, an
A,
IA tells clients that the time is right to convert shares of a money market fund to shares of a growth stock fund without telling clients he makes, I think that's right. It's
you are
not
correct.
prohibited there.
Yeah, that's right. That's exactly how to attack it. Unless done under a specific exemption described in law, it would be generally prohibited for an investment advisor to,
Charge fees in advance of service performed, charge commissions, charge fees based on performance, have discretion over a client's accounts. Unless under specific exemption described by law, it would generally be prohibited for an investment advisor to charge commissions, charge fees in advance, charge fees based on performance, have discretion. So my gut says charge fees based on performance.
your gut has
But
always been correct. Always correct. Why?
so
Because
where
you can, it says under specific exemption, that would be
okay.
based on net worth, right? So that's what that means in plain English, that unless done with specific exemption, and we do have that described in law, right? It's based on either your assets or the amount of AUM.
Yeah, and that's kind of where I was hanging up. But let me add, as investment advisor, I'm Dean, I'm also an agent and I'm
Yeah.
selling you a life insurance policy. I have to disclose that. So earning a commission on that.
Well, yeah, you're starting to read too much into the question. None of that is in this question. It's nothing about life insurance as a non-security product, nothing like that. Your point that would have to be disclosed, but remember, the investment advisor is your firm, not you as an individual.
Okay. Yeah.
And
Okay.
when we hear on this test, we see commissions. We shouldn't even be thinking life insurance. We should be thinking broker dealers.
Yeah. Okay.
Right. So, but that's okay. But remember, the moral of the question is your gut has been right every time so far. So we want to make sure on the actual test we continue to follow your gut. Don't start trying to bring extra stuff in there. Alvin's spouse is a trustee of a trust established by Henrietta Flood, which directs income from the trust to be paid to Alvin for as long as he lives. Alvin's son Floyd will receive principal on Alvin's death. Floyd would like to receive some of the principal before Alvin's death, and Alvin does not object. How should the spouse, the trustee, act in this situation?
D.
B as in boy. B,
No,
see,
I said D is in dog.
oh, there we go. Okay. I was going to say,
Yeah.
too long to be wrong. Yep. That's exactly right. To follow the terms of the trust. Which of the line would not constitute custody of a client's account under the Investment Advisor Act of 1940?
Investment bank having temporary custody of client securities.
depositing clients' funds in bank accounts accessible by the which of the following would not constitute as custody? So, okay, client prepayment. So it's a Investment Advisory Act of 1940. So it's a federally covered advisor.
Right
So
on.
they can take up to $1,200.
Oh, well,
So
look at
that's
you.
so one is would be acceptable. So it's at
Yeah,
least
yeah,
having
excellent.
temporary custody of client securities. What is temporary? Is it less than 3 days?
Well, I think I'm waiting for you to answer, but you tell me. Whoop, I didn't mean to hit the button yet, so that's all.
Yeah. I would say one only.
You are correct again, right? So when you said 3 days, remember 3 days. Now you're again, maybe it's just that we're on question 7. Give yourself permission, by the way, like every 40 questions or 50 questions, take a little mental break to Tahiti. Come back soon. But now here is again where you brought it's in your brain housing group, which is good. So that part's good. You said, Dean, there's a 3-day thing. That is a more linear question about, you inadvertently receive a client's check made payable to a third party or made payable to your firm and it should have been made payable to some third party. That's the 3-day thing. But they wouldn't combine that with you took custody. That would be a
Okay.
separate question, like what do you do, right? So
Yeah.
just don't bring extra stuff that you
Pee
don't
break. I'll be back in 30
Okay,
seconds.
you got well. Take more if you need it. Don't rush.
My son is home early from school and he's got his first
No
loose
problem.
tooth. My
You
wife
want
is
to take a
trying
break?
to rip it out of his head right now.
No problem. No problem. You need to take more of a break, or you're okay.
No, I'm good. We're good.
Okay. I had a guy, I may have told you the story I already mentioned. You know, we are going over this, and I didn't mean to sound like about your son. I said, you need to get rid of the distraction. He goes, Dean, my wife and my kids are not a distraction. I go, I get it. That's not what I meant. So your client asked for a recommendation for emergency fund. You would most likely suggest,
Client asked for recommendations for her for an emergency fund. You would most likely corporate bond, diversified common stock, a money market mutual fund. Time money market mutual fund because it's fixed rate. C.
yeah, right on. And they sometimes check up and say what should come first in terms
Let me
of
ask you a question. So obviously it's C. In my opinion, it's obvious
yeah,
it's right.
yeah.
But a money market does kind of have a fixed rate of return.
Oh no, it has a fixed NAV.
Okay. Yeah. Okay.
Not a fixed rate of return, a fixed NAV of $1, right?
Yeah.
Now, the other thing they combine with this is the idea that the start of our financial plan should be an emergency reserve and life insurance
Yeah.
before we move on to, other things in your financial plan. Which of the following attributes of common stocks best describes why the internal rate of return is not generally used to determine the return on a common stock? Hmm, that's kind of interesting.
Why is it generally not used?
Yeah,
No maturity date and price. So uneven cash flows and no maturity, yes, but I like
I'm
how they
with you.
throw
I'm
and
with you too.
price.
Yeah, the no terminal value. Yeah, I'm with you. I'm going to go B or D as well.
Yeah, I'm gonna go D.
I'm going to go D in. So that means we're adding that we don't know the price. Yeah, sometimes on discounted cash flow, we'll just assume it's a terminal investment and make up a ending point. But you're right
Yeah.
on. Good job. By the way, just as I was processing it too, I liked uneven cash flows. Okay, well now I still got to work because damn it, And then I knew there is a present value based on the DCF of the dividends, right? So, saving for higher education using which of the following would generally result in the worst outcome when filing the FAFSA form, financial aid.
UTMA.
The well, it's going to be on the kid's tax ID number. That's correct. Yeah, so I like that. I was either going to go for that or the Coverdale, but I think you're right. The utmost is going to be worse. Which of the following statements correctly describes the difference between corporate preferred stock and long-term bonds? So best describes the differences.
Bonds represent a creditor position. Preferred stock represents equity position. I mean, yes. Pay a fixed amount of interest. Preferred stock pays a fluctuating dividend based on earnings. Interest paid by firms is tax deductible expense. Dividend paid on preferred stock is not tax deductible. I like that.
Yeah,
Bonds usually are not rated. Preferred stock usually is rated. That is not true. So I'm going to say one and three.
again, you are correct. Excellent, excellent. Portney Advisory Investment Service is a federally covered investment advisor. Its principal office is in State X. It has branches in Y and Z. Brenda's the manager of the branch in State Y. Some of the individuals being supervised by Brenda have clients in X and Y, and Heather have X and Z, Y and Z. Brenda must register in,
Well, okay.
this is testable.
Yep. So she's a federally covered advisor,
So she only has to register in a state where she has a
and
place.
her home state is Y, so it's just Y.
Right on. That's what's wonderful about working for a federally covered investment advisor. A broker dealer is the lead underwriter in a new issue. During this period, the new security is in registration. Which of the following would usually be distributed?
Broker dealer is lead underwriter in a new issue during this period. This new security issues is in registration. Which of the following will be usually distributed? It is red herring and indication of interest forms. Company's last research report on the stock. All right, let me read this. A broker dealer is the lead underwriter in a new issue. During the period this new security issue is in registration, which of the following will usually be distributed? Subscription of forms enabling clients to place no. A red herring prospect, yes. The company's latest research report on the stock. Indication of interest forms. So during Tombstone, they can have indication of interest. So it's two and four.
Excellent, excellent, excellent. Under NASA's statement of policy on ethical and dishonest business practices of broker dealers and agents, all the following practices are considered unethical except, so again, one of these questions is ethical, three of these answers are unethical.
All right, I'm starting with D, receiving written discretionary authority from a client within 10 business days of first executing a discretionary trade with oral authority from a client. So that is ethical because it's okay. Determining the quality.
Which an agent, remember, this is an agent of a broker dealer.
Okay,
Agents of broker dealers do not have oral authorization. Only investment advisors have that.
got it. Selling 3,000 shares of ABC at a price the agent determines is the best the client can get without oral or written discretion. That's not true. Selling 3,000 shares of ABC at directed by a client at a price that the agent determines without oral or written discretionary authority. So hold on, how does that work if it was directed by the client without oral? Am I reading that wrong?
Selling 300 shares at the, yeah, I'm with you. So it says unethical except. So
Yeah, so but this question says it was directed by the client at a price, right?
yeah, so I'm with you. I think it's either A or B. So we got to decide now. We got to go read closely, right? So the client told me to sell 300 shares of ABC at a price that the agent determines. So time and price, that's okay, right? Selling 3,000 shares of AB at a price the agent determines that is the best that the client can get. I don't know.
Yeah, it's got to be B.
Yeah, let's see what the rationale is going to be on that one. I'm with you. I think given that answer set, there's not much of a distinction there. Time and price, we knew that part. Right, got that. Yeah, so we got it. By the way, this is that the reason the A is unethical is the best I determine the price. I shouldn't be determining
Yeah, you shouldn't be. Yeah.
the market should determine that price. Under the Investment Company Act of 40, purchases by which of the following are eligible for reduced sales charges on the fund's breakpoints?
Mine purchase of a man and a custodial account for his daughter, where his wife, not he, is a custodian. Two friends who have pooled their money to make large purchases. Investment club. Qualified retirement plan. You can invest in A shares in a retirement plan. You can,
Yeah.
so that's one. Combined purchases of a man and a custodial account for his daughter, where his wife, not he, is the custodian. So it is family.
Yeah.
So that's yeah, so it's one and two in my opinion.
Excellent. I would have tossed out, you got it right. I would have tossed out four,
Yeah.
and then I would have gone by process of elimination back into it. HSAs offer the opportunity for employees to use pre-tax funds to pay for a wide range of medical expenses. Medical expenses included are all the following except now. P.S. That's not the test question here. The test question is you have to have a high deductible catastrophic health plan,
Yeah.
HSA.
Medical expenses include all the following except I'm my gut says long-term disability premiums, insurance premiums.
What do you say about your gut?
The only thing, so I know you can't contribute to an HSA plan once you hit Medicare,
That's
but
right.
what's the difference between Medicare premiums and long-term care disability premiums?
Well, they're separate. They're separate coverage. I mean, I don't think I'm not a expert on Medicare, but I don't think Medicare does it cover long-term disability.
Up to a certain day, but I mean, you're
I'm
still
not
doing
sure.
premiums versus that. I guess I'm thinking too much into it.
Yeah, I think so. I'm not somebody who would know much about. The one that's been showing up, by the way, is Irma,
Yeah.
which is that's there about that. You know, if you make too much, you're gonna have to have a surcharge. Which of one would be least likely to be organized as a limited partnership? Kind of a weird way to ask this, but
Mm-hmm. Indexed ETF. I I I would go A.
yeah, it's just a weird way to ask you. But we should. I think I don't care about these questions, but B, C, and D are organized as partnerships.
Yeah.
Businesses have a number of choices when it comes to offering their employees a qualified retirement plan. One that might appeal to a small business is the SEP IRA, which of the following is a correct feature of a SEP IRA.
Employees are not vested in employer contributions until which one? Okay. Employees age 50 or older can make additional catch-ups. Okay. Employer contributions must be same percentage of a salary for every eligible employee. The employee must pay tax on employer contribution the year they're made. So businesses have a number of choices. One that might appeal to small businesses and SPA. Okay. Um, it's A. So
Employees are
appeal to
not
the small
vested.
businesses. So are we talking for the employer or the businesses themselves?
Well, yeah, it says which of the following is a correct feature. So it didn't even ask about Bennett. It just says one of the features of a SEP. And you're saying a feature of a SEP is
Is
employees are
attractive.
not vested until completing 5 years. I've never heard of that
So
before.
I'm reading this that I'm the employer and I'm offering Dean Tinney a SEP IRA.
Uh,
Okay. What's attractive to me as the employer is that Dean can't be vested.
what's not attractive to you?
One might appeal. Which of the following is correct?
Oh,
Say your question again.
which of these would you not like as the self-employed person you made yourself?
Oh, then it'd be C.
Yeah, right. And that's why you should be aware of that. Remember, so the test is always giving you the negative shit.
So I guess I'm reading that wrong because
Yeah, I'm with you, but the grammar, so it's okay. I'm gonna beat up my friend Chuck, or I'm not gonna beat up you. But one of the challenges on this exam, and you're gonna miss questions based on grammar. So that's why I knew you knew this, right? Because when I flipped it on you, then you got the right answer, right? Right? Because I asked you the
yeah,
opposite, which is what feature should you know? If I sign you up, Mitch, as that employed, self-employed person, and then you find out, see, you're gonna be mad, aren't you?
yeah,
You say, what do you mean I got to take care of my employees? I might question why you don't want to take care of your employees, but right? So,
yeah.
but that's just the nature of the beast, to be honest with you. I mean, that's welcome to 66. Now, by the way, even if you read that wrong, though, I'm going to put it back to your 5 years. Look at this, even wrong. That's what you know, that's what we want. You have plenty of margin of safety there. So there's not, that's why I wish I could get more people to understand that it's pass fail. We're not after a 90, we're not after an A. What we're after is margin of safety, right?
Yeah.
And the higher the scores, the more margin of safety you have, right? So like I say, don't beat yourself up. And by the way, I would not want you on the exam to start getting wobbly on this one. I would just, want you to assign it to the universe and move on and say, oh, where's my next performance opportunity? By the way, though, that being said, let's read the rationale. Employers must contribute. Step buyers do not permit catch up instead of locally. Yeah, not much of a rationale. Richard, Tim, Sam, and Fred are a golf foursome. During one of the outings, they decided it's time they did something constructive with their money, and they opened an account at a brokerage firm. When the account is open, tenants in common, suitability information would be required on.
B, all four individuals.
Yeah, right on, right on. Under the Advisor Act of 1940, exclusions for providing investment advice solely incidental, that is very much test language, to the practice of the profession is available to all the following except.
So it's a late provision under the
That's right.
Investment Advisory Act 1940, the exclusion
This
for
is where you
providing
get
investment
messed up when you
advice.
don't know what the memory aid device is. The L is lawyers, there's C. A is accountants, there's A.
Yeah.
Teachers is T, B, and then the
It's
E is,
economics is D.
yeah, it's an engineer. It's not
Yeah.
economics. Assume you own Capco stock that returned 14% over the past 5 years, during which the stock market returned 12. The fund has a beta of 1.1 and the risk-free rate of return is 4%. What is the fund's alpha?
Okay. So fund that returned 14%. So here's what I'm doing in my head. I'm going to speak it out loud.
Yeah,
So,
please do. Please do. I want to know what you're doing. Well, let me tell you what I would have done first. I want to cloud your mind. I don't know if it's helpful, but it's helpful for me. I always take immediately 14 minus 4,
yep.
12 minus 4, right? That's what we could have got without risking our capital. So the market return wasn't 12, was actually 8.
So the alpha is 2. Well, no, hold on. 8. Oops. It's A, 1.2.
Excellent, excellent, excellent. I love it. Right. So what I do is I just take that 4 right off the top.
Yeah.
Right.
And then you times that 8 by 1.1, the beta, and then you take
Yeah.
the difference between the 10
Yeah.
and the
Yeah.
8.8.
Excellent. 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 Now remember too, this is what we were talking about with margin of safety. You've done really good on some of this kind of stuff, which is fantastic Because with practical application questions, there's no interpretation of the answer like there is in the grammar and a SEP account for
Yeah.
that person, right? But that being said, if you miss your mark, it's never going to be the math, it's something else. In order to sell securities where immediate execution is more important than price, is called.
In order to sell securities where immediate execution is more important than a price, it is a market order.
Yeah, if order to sell securities where price is more important than execution would be a limit, right?
Limit order.
Yeah. Under the Uniform Securities Act, a state registered investment advisor who only has an office in state N would not have to register in state O if its only clients were.
State registered advisor in state N would not have to register in state O if the only clients were not credited. It's not accredited
Yeah,
investors.
B's
It's
out. You should
not six.
got B out of there, and you should got, yeah,
Um,
it's not six. D is out, so now I got to
it's
say,
trust companies.
yeah, it's either going to be complex trusts or trust companies, right? Excellent. A state registered investment advisor maintaining custody of funds and securities discovers its net worth is 32,000. So we would know that 35 should be doing. Which of the following steps would be required?
File a financial report with the administrator by the end of the close of business day.
Yeah, man, tell them what you're doing to fix it. Oh, sorry, I hit the wrong button for you. Within you do increasing the firm's net worth. What?
Oh,
What do we do here? The minimum net worth, we got that right. When a firm discovers its net worth, it must increase its net worth. Well, who cares? Okay, got me. I had no idea on that one. As in this case, it results in excess net worth. Well, there's one of those what I call Chuck gotcha questions. I don't think we're going to get that on the test. I would have said either we're going to go to 35 or we're going to make the report. So I would have missed that as well. Okay, a company that has issued cumulative preferred stock.
D.
Yeah, right on. Your firm onboards a new investment advisor client. Which of the following would be the most appropriate way to obtain information about this client's objectives and constraints?
C.
Yeah, if you missed that one on the real test, I would flunk you immediately. I mean, your seat would shoot you into the ceiling, and I'd come push down and say, "How the heck did you miss that one?" Which of the following accurately describes a cease and desist order as authorized by the Uniform Securities Act?
I would say B.
Yeah, remember they don't have a badge and a gun, but they can certainly say, "Hey, cut it out."
Yeah.
The term used to describe investment vehicles whose value is based on an underlying asset is.
The term used to describe an investment vehicle whose value is based on an underlying asset is derivative.
Right on. Sarah has passed her Series 6, but not her 63. As Jack's assistant, Sarah has frequent telephone contact with customers to whom she provides account information and stock quotes. In this situation, Sarah is.
Jack Cupson, whom provides account information and current stock quotes. She's in violation for sure. So B is out, non-violation of any
Yeah,
applicable
I don't know.
statute.
I'm not sure. I'm going to say she's not in violation because she's not actually doing anything other than clerical stuff.
So
But
she's not accepting orders.
I don't know. I could miss it, but I'm going to say
Okay.
that since she's not talking about investments, right? She says, "Hey, Mitch, you got 50 grand. Hey, Sarah, can you give me a stock quote?" By the way, this comes from the 50s when people don't have a smartphone with a quote.
Yeah.
I'm dating myself, but when I came into the business, I literally had clients who would call to get stock quotes. So
I mean,
I'm saying
what I
B. What
want
do
to
you
do, I
say?
want to see an
You say
accurate thing.
D?
I would have said D.
Okay, let's do it. So, boom. Okay, so
Yeah, you were
provided
right.
Sarah doesn't solicit business and doesn't give advice. Yeah, there you go. So, when she crosses that is when she says, "Oh, hey, I know what Mitch's presentation is. I've heard it 1,000 times. Want me to give it
Yeah.
to you? And you can buy some NVIDIA stock?" Well, then we're in trouble. An investment advisor representative is prohibited from.
Charging a fee for investment advice when earning commissions on recommended trades without disclosing the nature of the dual relationship. That is a yes. Disclosing to clients that he is not buying the security being recommended to them for his personal account. He's not prohibited to do that. As part of his compensation financial plan, selling life insurance to an advisory client issued by a company he represents, even with disclosure to clients. Recommending proprietary products only. So it's asking, what is he prohibited from?
That's right.
He is prohibited from charging a fee for investment advice and then earning commission without disclosing it.
Yeah, right on. I love it. And that's what you want to do. I love what you did there. When we get those challenging grammar kind of questions, give yourself permission to rephrase it and just say, okay, what are they asking me? And I really think on NASA exams, that's really important. So I love what you did there. You just, once again, in your own mind, rephrase that to make sure you are answering the question that was being asked. So I like that. I would do that almost every time, particularly on these kind of questions where you read them. And if you forget what the question was about, it's easy to pick the wrong one and go,
Yeah.
oh, B is to prohibited, B. And then you hit B and you find out that, oh man, I forgot the prohibited part. So Rule 144 applies to the sale of all the following except, I like this one.
Registered securities by an offer to an issuer, unregistered securities by a non-affiliated shareholders, registered securities by a non-affiliated shareholders to an issue. So if it's registered, it's on an
Yeah,
exchange.
yeah.
So that would be it'd be D.
I love it. It's like learning a foreign language, right? So I love it. That's what that is by definition. To be in compliance with the Investment Company Act of 1940, it's permissible for a portfolio manager of an open-end company to buy all the following securities except.
Okay. To be in compliance with Company Act 40, it is permissible for a portfolio manager of an open-ended investment company to buy all the following securities except call options, high yield bonds, share of limited stock, and margin. So high yield bonds and shares of other mutual companies
Yeah, we
that
have high yield bonds
those
funds.
are out. Um,
That's right. So guys decide, can I buy
so is
call?
it where my brain is it a covered call option? Is it a naked call option? Is it about
Well, yeah, okay.
I
So
don't think you can buy stock on margins in
yeah,
a
I'm going to say D because I think that's the bigger deal. And
yeah.
here, by the way, I could get it wrong. If you want A, I'll take it. Put
No,
A.
I would
Here's
pick
why I would say A is okay because if I have it in my prospectus and I say, hey, Matt, I'm expecting additional contributions to the fund, and I'm afraid that by the time I get the money, it might get away from me. So I'd like to be able to buy call options on stocks I'd like to add to the portfolio to kind of lock in that price, as well as not have to buy it if the stock goes down. So I could see where call options would be acceptable. Your point, by the
yeah.
way, some mutual funds, you could have got right with what you're saying to eliminate A. A covered call strategy is very conservative. Lots of mutual funds do it to generate additional income on the portfolio. So that means A, you can do that.
Yeah.
I
But I
would
think
say,
I'm with you. Stock on
yeah,
margin, I
let's see
would
if we get
pick.
it right. Let's see if we get it right. All right. Boom. Yeah. So, by the way, there's a limit on how many shares of other funds you can buy. But again, you don't want to be
Is
bringing
it
it.
3%?
Good job. Yeah. By the way, I didn't want to bring that because I want to cloud your mind. But remember that it says you can't do that, and you can do that up to a certain extent.
Yeah.
Carol's opening an investment account with her agent and will be expected to disclose all the following items of financial or personal information except. Yeah, they like this one for some stupid reason.
Carol is opening an investment account with her agent, and he will be expected to disclose all the following items of financial or personal information except age, investment experience, educational background, annual income. Who is, but and will be expected to disclose all the following items. Age, yes, for suitability, investment experience, educational background, annual income. Um, A and B are off, right?
Right on.
They'll need to expose them. I'm going to say educational background because annual
Yeah, they love
income,
that for some reason on the test. I don't know why they like,
yeah,
but that's correct, right? I do need to know your annual income because I need to know whether you're credited or
yeah,
something.
yeah, yeah. if you're able to afford it.
Qualified annuity plans offered under 403B of the Internal Revenue Code, referred to as tax sheltered annuities, are not available to.
C.
Yeah, that ends up being a give me at the end of the day.
Yeah.
Fraud would include a willful omission of.
D. Any material fact.
Yeah, I don't know what this that might be pertinent. That's what makes it material, right? So I'm not
Yeah,
certain
yeah,
there would be a material fact that isn't pertinent because otherwise it
yeah.
would be immaterial, right? Under NASA's model rule of unethical business practices of investment advisors, investment advisor reps, federal government advisors, an advisor may not borrow money from which of the following clients?
Investment advisors, investment advisor reps. An investment advisor may not borrow money from which of the following clients? A bank not affiliated, but they can borrow money there. A finance company not affiliated with advisor can borrow from there. A broker dealer not affiliated. Okay. Federally covered investment, not a finance company. So it's a federally covered investment advisor because they're not loan institutions.
Yeah, they're right. That man, that just warms my heart, man. You didn't nailed it. What I love, Mitch, is you not only nailed it, you have that terminology or vocabulary they use on the test. That's exactly nailed it. I mean, there's the way you even described it is technically correct. Which one does not meet the compensation test for defining investment advisors under 1092? Does not meet the compensation test.
A real estate agent advertises that she will give free advice regarding investment proceeds from the sale of any of the list. Okay. Your next door neighbor recommends the purchase of a certain security from his broker, which you eventually do. Okay. Which one does not meet the compensation test? I believe that's it. An insurance agent sells life insurance policy and receives a commission on that policy. During the sale of the insurance policy, the agent provides some securities investment advice. Subscription payments are received by a publisher of a newsletter providing impersonal securities. Whoa, okay. Which of the following does not meet the compensation test for defining investment advisors
Yeah,
under
I would
securities
have
law?
used the Sesame Street trick. One of these people is not like the other.
Your next door neighbor.
Yeah, I mean, your next door neighbor is
So
like,
I would pick that. Um, Subscription payments for receiving of not for impersonal.
yeah, remember
That
that's a
doesn't.
newsletter and it says it's securities related. So impersonal is not about whether you have to register as an investment advisor. It's about if I charge you more than $500, do I have to give you a copy of Form ADV?
Okay. Okay.
So,
Yeah.
so yeah. And good news though, again, as your tutor, I love it. You've got all that stuff in your brain housing group, so it's good. Right? It's good that it's up there. Just make sure you're applying it to the scenario that you're given. Which of the following strategy would be least likely employed by a bond investor?
Rebalancing.
Yeah, that would be, asset allocation.
Yeah.
By the way, the other one thing they ask is which of these strategies is most conservative? A.
A laddering.
Well, yeah, which of these would be used for a target date at like a high school, college? And that would be D, right?
Bullet strategy.
Right on, right on. Sarah Vision Services has just entered bankruptcy proceedings. As part of liquidation process, the lowest claim against assets is held by.
The lowest, it'd be common stockholders.
Right on. Excellent. That's exactly right. Remember, we have a theoretical liquidation value of the business known as the book value, right? So the book value would be the residual claim to those common stockholders if we liquidate it. A person with no place of business in this state would not be considered a broker dealer if he effects transactions in the state exclusively with all the following except.
A person who has no place in business in the state would not be considered a broker dealer if he affects transactions in the state exclusively with all the following except investment advisors, insurance companies, issuers of securities involved in the transaction, other broker dealers. Would not, a broker dealer would not, a person who has no place in business in the state would not be considered a broker dealer if he affects transactions in this state exclusively with all the following skep: insurance companies, other broker dealers, insurers. It's got to be investment advisors.
I love it. That's right. That's the only answer that is anywhere close to being a retail kind of person, right? Because they might have retail clients.
Yeah.
A wealthy family wants to create a charitable entity that can support causes for generations. They want maximum flexibility in choosing portfolio assets, including liquid assets, and the ability to make grants directly to individuals. What charitable structure best fits their goals?
Hmm. So I like the private foundation
Yeah,
direction.
it's gonna. I would prefer they do the donor advised fund, but you're correct to say, right?
And here's why I ask between the two, because it allows broad distribute options and flexibility of investments. Okay, that's what their wishes are. Because it simplifies reporting by consolidating all tax filing through a sponsoring organization.
It's
The
just
only
not.
thing is, what makes that not true is there's not a sponsoring organization.
That's exactly right. That's exactly
Okay.
so. Usually the question is about the donor advised fund and how it's much easier and simpler and less expensive than a private foundation. Under Uniform Securities Act, which of the following statements regarding employment of an investment advisor rep by a state registered investment advisor is true?
Okay. The investment advisor must notify the administrator whenever the investment advisor representative is terminated. The investment advisor is not required to notify the administrator when an investment advisor representative begins employment. The registration of an investment advisor representative is effective only as long as the individual is employed by a registered investment advisor. It's 1 in 3
That's
because the state registered investment, you have to.
exactly right. Exactly right. Under ERISA, all the following retirement plans must set standards for vesting, eligibility, and funding, except. Kind of a weird way to ask this.
Deferred comp.
Yeah, that's right. Remember, deferred comp aren't subject to that. Boy, that's the danger. I've seen companies go bankrupt where people had, millions of dollars in deferred comp and didn't
Was
want
that Enron?
Enron, Lehman Brothers.
Yeah.
I mean, yeah. So, you know, I mean, a part of me is like, okay, well, you were a big mucky muck there, and that's part of the.
Sears, shit. Sears went out of Sears,
Yeah.
the largest.
Sure. Who would believe it? I mean, all the capitalism without failure is like religion without hell, right? I mean, where are they now? Clark, a partner with a minority interest in ABC Partners. So when I see minority interest, I think no change in control. I think notification. Withdraws from the partnership to form his own separate partnership. Clark Advisors, ABC Investment Partners, so his former firm.
ABC Investment Advisors must notify Clark Advisors. Must change its name because of partnership. No. Need not to notify its clients of departure of Clark because only a minority. Must notify its clients of Clark's departure with a reasonable period. My gut says D.
Yeah, yeah, it's not changing control, so just notification. Investment advisor rep tells advisory client to buy U.S. Treasuries. You're guaranteed to make money. Ooh, I don't like that part. Under NASA's model rule on ethical practices, which of the following statements is true?
I mean, he guarantees it. It's unethical because it guarantees it's B.
Yeah, I mean, you have interest rate risk, right? So
Yeah.
the statute of limitations on the Uniform Securities Act is,
5 years.
yeah, remember 2510, 2510. Clients should be aware of potential effects of volatility on the portfolios. Which of the following would have the lowest volatility?
Lowest, okay. Clients should be aware of potential effects of volatility on the profile. Which of the following would most likely have the lowest volatility? Government bond fund, but or a money market fund.
Okay, well, I'm not going to mark you wrong. Which one do you want?
The lowest volatility is the money. I would pick money market.
Yeah, don't overthink it. That bond fund, remember, they have long-term bonds.
Yeah.
They're gonna have that. Well, I got to tell you, you remind me of a fellow named Nico. Nico is one of the few guys who had as much of a mastery on this information as you have demonstrated here today, Mitch. And so now let me do. We did that. I want to set an apprentice, and we want to. I'm going to send you the PDF of this practice test. And print options, PDF. Boom. Save as a PDF. Yep. Save. Mitch is king of the Series 66. I don't think there's any problems you have. I'm going to email that to you. I don't ever put anything up on the channel without your permission, so I'll send this video to you. But after you pass, I think people would find it very helpful if you give me permission. I'll put it up on the channel as a shared screen practice test because I really think you did a great job. And you not only did you do a good job, you did a good job as your tutor articulating the issues and the vocabulary that a lot of people find challenging.